Hello and welcome to KYC, Know Your Counterparty, hosted by PM Insights. I'm your host, Nick Fusco, and today I'm joined by Idan Miller. How's it going, Idan?
Very well. Thank you very much for hosting me, Nick.
You got it. So you and I have been working together for quite a few years now, and we've never really gotten into your origin story or kind of dug a little bit deeper on some of the latest and greatest things that you're working on. So I felt like this would be a really good platform.
All
Um,
right. Sounds good.
Wh- All right, so we're digging in. We would love to kick off with understanding a bit about your background. You can start with your firm name, what you do today, but really, let's go back to basics. How did you start your career, and how did that evolution eventually become what you have today at Unicorns.Exchange?
Sure. So, Unicorn.Exchange exists for about 5 years now. We started a business in 2019, and I got to the private market by pretty much by mistake. The decade before starting Unicorn Exchange, I was engaged with different digital advertising activities, mainly around affiliate networks. I had a few of those and sold some. And during the first buzz year of the crypto market in 2017, I was offered to join an interesting project that wanted to assemble the private market with the crypto market. The idea was to take a unicorn block, put it in an SPV, like many people in the industry does,
Very
but
common now,
instead of
right?
selling the LP interest of the SPV, the idea was to tokenize the LP interest and then register the token on security token exchanges
Right.
and turn the illiquid asset into a liquid asset. The problem was that the SEC didn't like the idea to tokenize real assets. So we worked for about a year and a half, really interesting technology behind it, but regulation wise, we couldn't launch the product. These days, there's some European regulation, mainly in the UK and Switzerland, that are getting near to enable such platform to work. But 6, 7 years ago, when we did our first trial, the landscape, the regulation landscape, did not allow us to do anything.
So you
So
were
after
potentially
spending,
way ahead of your time on that,
yeah,
which is
exactly. So
yeah.
after spending a year and a half on that project, I got very familiar with the private market, and I realized that it's a huge market, but there's not even one platform that connect all the different players in the industry into one platform. So I brought a few ideas from the digital marketing space, from the affiliate marketing space
Right.
into the private market space. So Unicorn Exchange was established as a sort of affiliate network for the private market, connecting all the different players that plays in the industry, whether they buyers, sellers, mediators, asset manager, fund manager, family offices, founders, employees. Everyone has been invited to connect into one network where we are connected via API connection with probably most of our competitors. So we collect bids and ask data from all over. And therefore we can be very efficient in connecting between demand and supply. So that's the philosophy behind Unicorn Exchange.
Right. And kind of the main thing that you're hitting on here when you're talking about family offices, asset managers, VCs, founders, et cetera, everyone that's going to land on this exchange, not everyone, but the majority of the volume is going to be up in the institutional end of the market, right? You're not constantly doing these $25,000 trades. It's more
Yeah.
$5 million trades. Or what's the typical size ranges you see? Is it more 1 to 5 or more 5 to 10? That sort of
So
idea?
we're doing anything from $500,000 and up. The largest trade we've done so far was $100 million, and the average trade volume that was done on our platform from the 350 trades we closed in these 5 years was about $5.5 million in size. So I would say the average would fall into the 3 to 6 bucket list.
Right. No, that's great. And one thing that I've always been impressed, or you've impressed upon me over the last 3, 4 years that we've known each other, is the amount of data and analytics that you guys focus on in-house. It's really You're always ahead of your time on the APIs, the connectivity, the understanding of your data. So you knowing that the average is 5.5 on 350 sort of idea, I've always been impressed by. Would love to know if you think that's a competitive edge in this market, or how maybe you differentiate Unicorns Exchange and what your team does versus a lot of the other brokers that are out there. And it's not a competition thing, it's a differentiation thing because I mean, we have quite a few brokers in our network. Everyone is different, and that's what makes the data flowing into PM Insights quite strong, right? That the fact that everyone is a bit different.
Yeah, so I think we one of our key advantages is the fact that we invested heavily in technology. I think in the last 5 years we invested more than $3.5 million in our technology. The base of our technology is a big database of bids and asks that are being piled together into one big database, whether we get it directly from our buyers and sellers, or we get it indirectly from other brokers, other platforms, other players in the industry. And we're doing a lot of analytic activity behind the scene to understand pricing, market sentiment, dynamic of bids and ask, spread of bids and ask of, I would say, probably about 500 to 600 different companies at any given time. And that gives us and very interesting data that we use on our day-to-day activity, and we are able to match buyers and sellers in a much more cost-effective and efficient way. So I think this is one of our main key advantages. Now, we are going to release to the market beginning of next year a very interesting tool. We call it the Monday.com of the private market. It's a full management system combined with CRM, data analytics, market insights, market benchmark pricing, and a live marketplace that connects any intermediary who are working in the space and will give everyone who wants to use this platform, and it's going to be free to use for at least for the first 12 months, a very sophisticated management system to handle their activity. So if you're a broker or if you're an asset manager and your job is try to connect between demand and supply, this would be a very, very interesting tool for you to at least to try.
Great. And you've very purposely not compared it to what another broker or what another exchange is doing in using the reference to Monday.com. Do you think that this is really the next phase of the evolution of this market? Because when I look at our own business here in-house, PMI focuses on being part of the infrastructure, making sure that people are more comfortable when they're reaching out to someone like yourself or any of the other brokers or exchanges, that they have a good sense of price discovery and best execution. Do you think that this is just the next phase of infra that is going to be really helpful to make this market more attractive or more understood to the broader audience?
Well, the tool was developed first of all for ourselves.
Right.
We invested 5 years in development of a tool that will help us to manage our brokerage activities. And the fact that we were able to close more than $1.7 billion worth of trades with a team of 5 people, I think one of the main reasons we managed to do it is because we have a very robust and sophisticated technology behind us that helps us to work on, I would say at any given time, we work on 40 to 50 different potential trades, which means that we are in dialogue with probably 300 to 500 counterparties at any given time. And the fact that we are able to do it with a lot of data combined into all the discussion, a lot of semi-automated communication tools, with a very sophisticated feedback analytics that the system does by itself, some of it using AI tools. All of this combined into one platform gave us a big advantage in the market so far. And the idea was to we're not going to give 100% of our advantages to the market, but we're going to give about 80 to 90% of our
Right.
advantages to the market. And I think that could be a very interesting tool for anyone who's active in the space, at least to try and see if it really helps them as it helps us to be more efficient in the way they handle their business.
Right. And that efficiency is key. right? Because when you look at really the dynamics of this market, you can throw a lot of bodies at something, or the way you did it was ultimate efficiency. Is a nice bit of capital investment that you put towards the evolution of Unicorns.Exchange, but at the same time, that that might make you guys a fair bit stronger in terms of AI strategy, deployment, things of that nature. And when you and I look at the market, we know that a lot of those very lean companies or ones that can really capitalize on AI are performing best. So would love to hear thematically what you're seeing in the market right now as well. I mean, is there a certain sector that's performing exceptionally versus the others? Is there a certain sector that you think is lagging that could benefit from changes in technology? Switching over to really market sentiment now.
Well, I would say that the main evolution of the market of the last year was the concentration of the private market on a very few names that measure gets most of the demand in the market. If we look back 4 or 5 years ago, when we started the business, I would say that at any given time there were about 100 names that we saw demand for, and it was nicely spread between the names. Then the inflation of the market of 2021 came, pushed everything to be highly inflated, and then the market fell down in the beginning of 2022, and it took about 18 to 21 months for the market to start recovering. So only in Q4 last year we saw demand coming back to the market. But when the demand came back to the market, it was very focused on short list of name. I believe that in the first half of the year we saw about 10 to 15 names that drew attention of investors. Nowadays we see about 25, 30 names that draw the attention of the market. But these days everyone is looking for SpaceX. Everyone is looking for Databricks. Everyone is looking for XAI
Blunt.
or OpenAI or Anthropic or
Right.
Anduril. And you cannot find any demand for names that 2 or 3 years ago were very, very popular by investors. And it's not specifically about a sector. It's more about a concentration of demand into very, very late stage, highly priced names. Everyone hoped that they would get into the IPO stage very soon, but no one knows exactly when the IPO will happen.
Right.
But we're seeing a lot of demand coming in a very short timing into the name, while other names are being left aside with less attention from capital.
And I think that mirrors a lot of what we've seen in the public markets in a strange way with the Magnificent Seven, right?
Yeah.
If you're looking at Nvidia, Microsoft, Apple, Google, you're really seeing all the attention there. You've seen a 100% share price increase on Tesla, with the advent of Elon Musk. So naturally that folds both ways from private to public and public to private with
Yeah.
SpaceX. But we're certainly waiting to see what's going to happen with the Mag 7 Plus or the next 8, 9, 10 names that are, fringe, were popular, your Discords, your Epic Games, et cetera, of the private market, because we certainly see some sell pressure, but we also see the sell pressure ratcheting up a little bit. And to a certain extent, I expect a lot of these top 100, top 200, and 300 names to come back because there is some funding activity. So if you and I talk about the relationship between the primary market and the secondary market, I think there's a combination of what I'll call dry powder and then wet powder. Dry powder is like ready to deploy. Let's find the next Anduril. And then the wet powder is, oh no, we don't want to let this initial investment sink. We're going to have to retop this puppy up. We're going to have to put new money in. And when we're looking at some of these companies that are the top 200, 300, and 400 instead of the top 5 or 10, I have the expectation that those companies might try to defend against a little bit of secondary activity because they need that primary capital again. They need to get closer to profitability or show that their growth numbers are ramping up. So I'm curious if you're seeing any of that on your side or
Yeah, so it definitely creates challenge for these 200 names which are not on the top 20 or 30 names that puts all the demand. The lack of secondary activity is also a threat to the next primary activity of these companies. Because when there's a lot of demand that streaming into the company, and we saw it, Klarna is a good example. The Klarna secondary market pushed a lot of the buyers into primary activity that Klarna did along the years, whether it was an up round or a down round. The fact that the company always had a lot of secondary activities around it helped push buyers into the primary rounds. And Klarna was always successful in their primary rounds. The fact that there are no secondary buyers in the market today for Discord and Epic, as an example, will put some problems when the company wants to do another round. Now, maybe they have a strategic investor that will take the entire round or will lead the entire round, and then they will have less of a problem. But the fact that there are less secondary activities around these names does create some problem to the company itself. I
Right.
definitely think so.
So your sentiment is secondary begets primary, but also secondary begets secondary. So if they have a trend of allowing for secondaries, if they have a trend of certain things moving from direct to also landing in SPV, that helps the overall liquidity of the name, which also just helps the interest
Yeah,
in some ways, right?
absolutely. I had an interesting meeting with a founder of an Israeli startup that is one of the leading Israeli tech companies today. They grew very fast from like 200 million, being a company of 200 million valuation, into being a $20 billion company valuation. And up till recently, secondary trade was not part of their ecosystem, not on the sell and not on the buy side. But once they got into the attention of the market, they started getting a lot of demand into their shares. The first reaction of the company is, let's hold off. We don't need this noise around us. Let's just completely ban the ability to clear direct trade for now, and let's just keep our cap table close to whoever we want to bring on primary. But he came to me to hear my opinion, and I told him that if he thinks 2-3 years down the line, he needs the secondary market to start building up some demand that he doesn't recognize, because the main demand for primary rounds come from traditional VC firms, the big VC firms that usually participate in these D, E, F rounds of successful companies. But if you want to start building more demand behind the company and maybe even getting closer to a potential IPO further down the line, you want your shares to start leaking into smaller type of funds, which are not necessarily the big VCs. These asset manager who takes 20 million, 30 million allocation from another big VC who got the allocation directly from the company, and they spread it around between $2 million, $3 million buyers. And the fact that the shares are leaking into more and wider type of investor creates a good infrastructure for the company for the days to come.
Right. And just to complement that, we're beginning to see similar things or have now seen similar things on our side of the fence in terms of client interest or where these shares are ending up. So whether it's going to be, let's say, a UCITS fund in Europe or a 40X fund in the US, you start with maybe some of these smaller increments, and we get to show these on our site. But over time, once those names IPO, those asset managers that you're speaking about, Idan, are perfect holders because they have to keep a smaller percentage of the portfolio in these illiquid assets. But once the IPO date, they can expand their holding and then adopt the next bit of pre-IPO or growth stage privates. And that's really where a lot of that alpha is coming from. That's how they differentiate with the other asset managers out there. So absolutely echoing what you're saying and seeing it from the other side, it makes perfect sense too. So that's good. I hope you're getting a good swath of that with working with the other Israeli founder. Would love
Yeah,
for
well,
you to just comment.
there's some convincing to be done here still,
Always.
but I think he's getting more ready to start being a player in our ecosystem.
Right. And would love for you, given your Israeli base, to comment on why Israel, in your opinion, has been such a powerhouse in the global community for fostering angels. Sorry, unicorns. Well, angels and unicorns, right? What's going on? What's in the water? How is there so much success? Where does it start with the
I think
education uni system or focus?
it's a combination of a few things. Where one, we have a history of a very sophisticated defense economic ecosystem from the 1960s and 70s, where technology was completely different than what it is today. But that built an interesting infrastructure of economic institution, academic institution that build a good education system for technology people. In the 1990s, the Israeli government invested heavily in building the infrastructure of the venture capital ecosystem in Israel. So there were a lot of governmental budget that was streamed into the area. And during the 1990s, I think the amount of startup that was produced in Tel Aviv area was only the second for the Silicon Valley area worldwide. And it creates a lot of successful Israeli companies where the first internet boom in the late 90s came into play.
Of course.
And that drove a lot of other people because the success stories brings more people into the pool. And during the 25 years that passed since then, there were a lot of capital coming into Israel because there are Israeli talent, and which brought more successful stories. Some of them were sold, some of them were IPO'd, and success always brings more success
Right.
into
Just
it.
as we're
And
saying,
that's how
secondary
the
brings
ecosystem.
secondary, success brings success here.
Yeah.
Well, so in that vein, I would love to end it with where do you think the market is going in the next 6 months or 12 months? Is it going down, flat, up? And then people should know how to get a hold of you. So if you want to give a shout out to your website, your email, anything you want, um, let's hit on
Sure.
both those things.
I think as long as the world would not get into a full World War III situation, which everyone hopes not, but who knows, because everything is very, very fragile. If not, I think the market will keep on moving up. I think the fundamentals, the economic fundamentals of most of the companies are good. I think economic, again, unless there will be some unexpected political event that will drive the world in a different direction, economy will keep on booming, and therefore our market, private market, will keep on following the public market, which goes into one direction in the last 18. Now that can change if the world politics will take us to different places. Then the economic area could completely change the direction. I think that the trend we spoke about before about the concentration of demand into very, very specific short list of companies will continue. It doesn't make our life intermediaries better. On the other hand, it creates some difficulties, but I do think that this is where the market will go from here.
Right. As much as
Um,
we would like to have courageous investors find the next open AI, because 2 years ago there wasn't an open AI that folks were really focused on, right? So if we
yeah,
can
no, I think there are
encourage
a lot. There are
find
at
the
least
11th and
five
12th
or
and
ten
13th.
other AI companies that does create some level of interest. But there are another 100 or 200 AI companies which may create very, very interesting products that does not create that interest, and some of them may need to create the interest because they're very interesting. But yeah, that's the way the market will keep on driving in the next 2-3 years, in my mind.
Good stuff. And when someone is interested to hear about the 100th AI company or similar, they're going to need to call you or land on your site.
Yeah,
So how do we get ahead of the launch that you're having in Q1? And then how do we give you a call or find you on the web?
yeah. Best would be to email us. Our website is Unicorns.Exchange, and my email is Idan, IDAN, at Unicorns.Exchange. By the way, our new Monday.com platform will be called Secondary Suit, or secondary suite to be accurate. But yeah, happy to answer any questions, and we will start giving access to a beta version of our platform early January.
Perfect. Well, we appreciate having you on today, Idan. Thank you so much. And this isn't a wrap for KYC. Know your counterparty.